Blank.
Hello everyone and welcome to the DashCast, where we go about trying to find the most interesting people in the world of cryptocurrencies, finance, and business. Today on the podcast, we have a fascinating guest known as Alex Mashinsky. Growing up through communism in Ukraine, experiencing socialism in Israel, and thriving in American capitalism, Alex has seen it all and exited 2 of New York's top 10 biggest venture-backed exits since 2000. He even played a leading role in creating VoIP, or Voice over Internet Protocol, the very protocol we use on voice chat applications on a daily basis. In this episode of the podcast, we talk about his personal life and break down our thoughts on the current state of corruption in finance and cryptocurrencies, as well as a variety of other topics. This episode of the podcast is sponsored by BravoPay. BravoPay, originally built for gratuity payments to artists and service professionals, has been operating in beta as a mobile payment platform for peer-to-peer fiat transactions that are seamless, secure, and anonymous. To date, BravoPay has a community of tens of thousands of active users and has processed millions of dollars in fiat currency transactions, and now is integrating blockchain into their software. After a successful proof of concept, Bravo began building an innovative hybrid blockchain platform with a seamless mobile user interface that aims to take cryptocurrency mainstream while enabling on-demand public and private anonymous payments worldwide using BravoPay's token. BravoPay has recently kicked off their ICO and has entered into their private sale phase. If you'd like to find out more, please visit the webpage bvo.trybravo.com or feel free to join the conversation in their Telegram group. What's going on, everyone? Nicholas Merton here from Data Dash, and today on the second episode of the podcast, we have a very special guest here today. We have Alex today, who we're going to be talking to. We're going to be talking a little bit about his upbringing. He has a very, very fascinating story behind him, a lot of work experience in regards to what he's been able to accomplish, coming all the way from Ukraine to inevitably the United States, and founding a variety of notable tech firms, specifically tied towards voice communications over the internet, being one of the early pioneers of VoIP, or Voice over Internet Protocol. And along with that as well, we'll be talking about his opinions on a variety of different things. I think Alex and I had talked before, and we had a lot of interesting opinions going on about the ICO space and exchanges, as well as money over the internet protocols. So I want to talk a little bit as well later on about his project, Celsius Network, get an idea of where he's going with that, and just kind of see how he's transitioning into the blockchain space. So Alex, thank you for coming on. I really appreciate it.
Thanks for having us.
Yeah. So I want to go ahead and start off by asking really kind of a simple personal question. I always like to do this when I have people onto the podcast, and that's just kind of learning a little bit about your upbringing. You've obviously had probably a whirlwind of adventure, going from a variety of different places and growing up all the way from Ukraine and ending up in the United States. So I'd love to hear kind of what you were like as a kid, how you kind of got started with everything, and what it was like.
Yes. Yes, I'm in my 50s, right? So I was brought up in the communism. I was born in the Ukraine when it was part of the USSR, you know? Remember those songs about the USSR?
Yeah.
So it was real communism, like food shortages, and everybody was paid the same salary, which was equivalent to something like $100 a month. And,
Wow.
And my parents, you know, they definitely didn't want to stay in that environment. They thought that they wanted to immigrate to Israel. My father was a refusnik. He was basically refused to leave Russia. And we were lucky enough that in 1970, Armand Hammer, who was with Nixon, actually put together this exchange of wheat for Jews. So they shipped, because Russia was starving, so they shipped Russia like 300,000 metric tons of wheat, and they released 300,000 Jews. And so I was part of that exchange. So when people ask me, why did you come to the United States? I joke and I said that I had to repay the debt that was paid for me back then, you know. So
That's an amazing story. I mean, it's crazy to see over the past few years how the region's changed geopolitically, but at the same time, it's fascinating to see how it led towards a lot of people fleeing and moving to different countries and kind of embracing more of a free market set of principles. And I mean, it seems like you fit right into that category.
Yeah, so it was funny because my mother wanted to come to the U.S. and my father wanted to go to Israel, and they were like fighting on the train in Vienna. They were like, you know, like I saw my family being split apart, and at the end, my mother said, "Okay, fine," and we immigrated to Israel. You know, it was touch and go. So I grew up in Israel, socialism. You know, tested that system, and did the military there, and it wasn't really for me. So right after I did one semester in the university, and that was it. Just hopped on a plane and came to the U.S. Did 7 tech startups, as you mentioned, all VC backed. So raised over $1 billion from venture capitalists, and taking companies public and so on. So a lot of traditional startup VC experience.
Yeah, definitely. I mean, to me, it seems really interesting to see kind of the transition and everything through the different systems, because you are dealing with not only vastly different cultures and different governmental structures and economies, but I think it's fascinating how you came into America. You have the kind of success story behind you of founding all these really interesting companies. And I want to spend some time to talk about that, because it seems like early on when I was reading through your biography and everything, as to kind of like your nature, you were very, at a young age, you were very kind of interested in testing around with things. You were very, I guess, kind of hands-on in a sense. And this, I think, inevitably led you towards, not only founding a lot of companies, but VoIP, which really to me is fascinating, because technically that's what we're using right now, and pretty much all these applications use. So I bet that feels pretty good on your end to be using something that you built that's so impactful.
Yeah, it's it's funny, but even though 1 billion people use VoIP every day, only about half of the population in the world has a VoIP account. So it's there's still another half that has not adopted it yet. And we'll talk about crypto in a second, but that's kind of shows you that after 25 years, there's still the adoption curve is just it just takes a very, very long time. I think every one of us, every human on this planet, has something that they're best at, and the only problem we have is that most people don't get a chance to discover their unique skill, right? Or that skill may not be necessarily in fashion, or that needed in the generation that they live in, right? So luckily for me, I have a different way of thinking, and I'm always thinking out of the box, and I'm quick to get to the conclusion of where things are going. Usually I'm too quick. I'm usually there 5 or 10 years ahead of everybody else, and kind of waiting for everybody to catch up. So being too early is just as bad as being too late. It's not. There's no vanity or pride in being too early.
Yeah, that's tended to be similar to what it's like playing a contrarian when it comes to markets, or trying to be the outsider in a sense and saying, look at this, and no matter how much you berate it, everyone thinks you're crazy. But I mean, it is interesting. I think you're someone who's well positioned to talk about this and kind of step into crypto, because I mean, you obviously were an early founder in some of the telecommunication technology that we use on a day-to-day basis. The real question here is where are we going with the crypto space? Where could we see that being, in the next few years? I mean, seeing as we're ahead of the curve here, we're obviously in the early days. Where do you think we are right now?
Well, it's definitely early days, because the VoIP, even though it took a long time, it needed the internet to be built out, right? So you couldn't deploy VoIP if most of the people weren't on it, right? So the problem we had with VoIP deployment was that people were signing up slowly. The network was built out slowly. Fiber had to be laid all over the world, and so on. With crypto, you have kind of a similar process, where the regulatory regime for money, touching money and transferring money and so on, is so old and so slow to change, that it's very difficult to adopt these new technologies that we're talking about, because every country has to decide how they treat it, and it's just a very slow process. So, when the internet was 10 years old, we had about 500 million users. Now, I think this October, Bitcoin is going to be 10 years old, and we only have something like 50 million users. So we're way behind the internet adoption on the crypto side.
So yeah, it takes a lot in regards to not only cultural adoption, but also how governments perceive it, because that's one key thing I want to talk about. Because when I look at the financial sector, and I try to understand kind of the underlying technology that they use, I mean, things like SWIFT, these are all underlying protocols that we use to do money transfers across the world, and to confirm validating transactions for a variety of different financial institutions and their clients. And I think it's going to take time to see this actually being adopted in crypto. We need to see these as protocols, but we are definitely behind, I believe, in the adoption curve. It's only going to be a matter of some type of catalyst. I've been talking, and I'd love to hear your opinion on this, Alex. You and I seem to both have a passion for markets to some degree, and you've seen different economic systems around the world. I've always believed that you're not going to really see mainstream crypto adoption, whether it be in developing countries or in the Western world, until you see a currency crisis of some sort or some kind of driving catalyst that's going to lead towards the necessary adoption of this. So we're seeing it, for example, in countries like Venezuela, Argentina, and Turkey, for example, where we're starting to see devaluation or hyperinflation or unstable governments, whether that be, for example, in Venezuela, where they're having issues with the current socialist government and some of the monetary issues that they have, and now they're resorting to the petro, and people are mining Bitcoin behind the scenes. So I'd like to hear, what do you think is going to be that driving catalyst that's going to help us catch up to the curve?
Yeah, so I agree with you. I think I don't see Bitcoin or Ethereum as a form of payment. I see them more of store of value, and because the infrastructure, again, is just not there. The transaction speeds are not there. So today, what they're competing with are all as the fact that all the asset classes are correlated, including gold, including everything that we used to rely on as an uncorrelated asset class. So today, the stock market, the bond market, and the real estate market are all at all-time highs, and usually that spells disaster. We're also in the longest recovery or economic cycle that we've ever had, which usually means that the music is going to stop at some point soon. And I agree with you that one of those triggers is going to create fear in the markets, and when there's fear in the markets, everybody's going to try to withdraw their assets at the same time, which causes a collapse, and they're going to want to park it somewhere else. You can't really park it in dollars because the dollar is losing value. And I see then a big everybody's trying to get through the doors into crypto, which will obviously drive the prices drastically. So, and that's just means transfer of wealth, right? There's going to be a tremendous amount of transfer of wealth between the people that used to have their assets in dollars or in real estate or whatever else into the people that have their assets in cryptocurrencies.
Yeah, I feel it's actually going to be very beneficial for retail, because for retail, you're dealing with mostly smaller money in that case. And for those who are getting either exposure right now or are going to be getting exposure when things start to pick up, I think they're going to have a front runner's advantage, because there's going to be a lot of people on the institutional side, like you said, who have money stuck in real estate, stuck in heavy loads of assets and debt, and it's going to be hard for them to maneuver that to crypto. So I think it's going to start out very much as a big wealth transfer and a kind of a revolution for the people taking back control of their finance. And I think with that, I mean, we understand there's a lot of responsibility, becoming our own bank, becoming, some type of entity outside the traditional system, and not relying on those kind of traditional, the traditional sense of architecture of companies in the financial space. So I'm excited to see that. It's going to be interesting, and I think the benefits will definitely outweigh the cons on that. But I've been generally keeping up with the markets at the moment and watching. Like you said, we've had the longest cycle to the upside, and equities, the price to earnings ratio for stocks have just gone out of the water yet again. And it's mostly just being fueled by very artificial factors, interest rates being low, quantitative easing. Now that's starting to fade out both in the US and European markets. But the biggest thing is that interest rates are so low still, to where people have just gotten behind the idea that you can keep buying your own shares. The companies themselves or financial markets will just keep on borrowing money and keep on propping up assets. And so long as the interest rate remains lower than the profit margin, and they can guarantee to a decent degree that they can earn that potential income from their investments, I think it's going to keep going. But when it does stop, when the music stops playing, as you stated earlier, it's going to be quite nasty. And I think that you don't want to risk not being a little bit exposed in crypto at that time. That's always been my kind of position on it.
Yeah, and look, you can fly closer and closer to the sun and think that you're brave, but eventually you get burned. So it's the thing is that there's this dichotomy, because the young generation and the millennials are, I think, the biggest generation in history, right, in the United States. So they basically, I saw a survey recently that said that they rather go to the dentist than walk into a bank account, into a bank. You know, so they're really not interested in the traditional financial system, and they're also not interested in. They couldn't explain to you why all this debt and national debt and all the stuff, the problems with reflation and what the Fed is doing. They couldn't explain any of that, right? None of them are economists, but they know that it's a raw deal, and they know they don't want to take that $22 trillion of debt that their parents are leaving them with, and they need a different system to do this. So they're all effectively buying cryptocurrencies. I just saw stats yesterday that blockchain, which is one of the biggest wallets out there, Coinbase, and a few others are still opening accounts at a record pace, 40, 50,000 accounts every day. So while cryptocurrencies have kind of went up and came down, the tide is rising very, very quickly. And again, all these people are eventually going to put more and more money into cryptocurrencies and use that in a more traditional way, including payments. It's just, all I'm saying is it's not going to be the first application that they usually open an account for store value, not to try to pay something.
Exactly. I think this is a good analogy where you see a lot of people who, since 2008, like you're mentioning, have kind of realized that they're getting the end of the stick, like they're not getting a good deal from the traditional financial system. And I know everyone that I've talked to has a personally bad taste in regards to banks. But the funny thing is that I always try to tell people, many people are worried about how are we going to teach the world how blockchain works or how cryptocurrencies work. And to be fair, and I'd like to get your opinion on this, Alex, for me personally, I don't think you're going to have to teach everyone how to use crypto, well, how to use it, yes, but to understand how it works under the hood. Because again, just like how we're using voice over internet protocol, we don't even, like as a user, I don't have to really understand how to use it. I can see the value in it. And I think that's where millennials, especially millennials and Gen Z, are really going to take the helm of adoption in crypto because they can see the value in it. They can see that their dollar isn't depreciating, that their value is relatively retained, and it's moving up over time as adoption increases. They can see that in many cases, as we're going to continue developing technologies like Lightning Network, possibly finding other things like side chains, other scaling solutions, that we can process the throughput of traditional financial institutions in a decentralized, trustless way. I mean, I think that's where the real value is showing, hey, we can provide these systems much better that don't have, the kind of inefficiencies of traditional currencies themselves, but also we can make the payment solutions even, and also the store value aspect much more clear and accessible to an average user.
Yeah, it's I agree with you. Yesterday I had this the crypto brawl 2.0 with Nouriel Rubini and in the blockchain in Vegas, and his opening his opening punch was, hey, cryptocurrencies are fraud and they're down 70% and this whole thing is just a sham, and I can't believe you, Alex, are part of this he called it BS or whatever, and I said to him, look, you're an economist, so if you just plot two charts, one is the Bitcoin and one is the dollar, over the last decade, with the fact that the Bitcoin is down 60-70%, it still outperformed the dollar at 99.92%, in 10 years. So the dollar lost almost 100% of its value over 10 years against the Bitcoin. So with a reduction in price, a recent reduction in price. So, and you can't argue with those numbers, right? I mean, so if it's really a store of value, it measures the lack of creation of value on the dollar side, because again, we're printing dollars like there's no tomorrow, and the Fed is just fixing everything with inflation. And it's just not going to work every time. It might have worked in the last 2 or 3 times, but doesn't mean it's going to work the next time. And the numbers are just getting bigger and bigger and bigger. So it's one thing to reflate $2 billion and then $1 trillion. Yeah, so I'm just saying that it's definitely most people don't see it. They don't see the reflationary impact on, and again, since asset prices are all-time highs. And I was holding in my hand Zimbabwean note. It's a $20 trillion note that's worth like maybe 50 cents. And I reminded Nuriel that 20 or so years ago, Zimbabwe had one of the strongest currencies in Africa. So it was them and the South African currency, right? The two strongest currencies in Africa. And look how quickly and how far we've come. So everybody thinks that the US will have be the reserve currency of the world forever. And no one gave us that franchise. No one gave us an exclusive on being the reserve currency. Every 40 or 50 years, somehow magically somebody loses that status and somebody else gains it, just like we took it away from the pound right after World War II.
Exactly. Yeah, I think people tend to struggle to sometimes see the macro trends and to understand that history is going to repeat itself in some way. And there's a lot of interesting things going on under the surface. The Chinese yuan, that's backed, I think it's backed by oil. They're trying to do like the all these different types of reserve currencies where they're backing things. You see in Venezuela, they're trying to do the petro. It's very interesting to see all these different kind of spurs of attempts at currencies and ways of managing currency and building value behind them. I think cryptocurrency is going to be the biggest disruption. It might not be a nation that replaces, the world reserve currency. It might not be the Chinese yuan or, one of the major currencies that we know. It's probably going to be a cryptocurrency, a global one that people can use across any nation without any government creating it out of thin air. I think people are kind of waking up to it, and when they get hit hard enough, they'll learn from it and they'll realize that there's an alternative. But I wanted to ask you real quick, Alex, about this topic about corruption and ICOs. We were talking last time a little bit after we did a little bit of call beforehand just to kind of get to know one another and learn about your project. But I really like that you were bringing up some of the stuff that was going on, and not only in the ICO space, but also on certain exchanges. And whether you want to name names or not, it's up to you on this. But I was really interested at what you were saying when we were seeing the massive kind of finale sell-off in Ethereum back about a week ago, and what you're talking about, what some of the exchanges are really doing. And I think that'd be really valuable for the general audience to kind of know about.
Sure, and I have a public post about it on Medium, so people are welcome to look it up, where I'm naming names and
I'll link it down below. That's good.
Yes. So the point is that because the market is not mature and there's a lot of inefficiencies in the market, in this nascent market, there are a lot of speculators, professional speculators, who basically jumped off Wall Street, where the margins have been all squeezed out and everything, and they're just really causing havoc here on these on this nascent market, and it's just painful to watch that, because I'm a long-term player, I'm a hodler, and I'm trying to create this community, and just like we did with Voice of RP, basically, right? And all we're seeing is big guys who come in and just cause tremendous volatility for no reason. So, most of your listeners are don't even know that when they park coins on exchanges, that exchanges use those coins to create profit. So I for example, I brought an example about Binance and how they announced they're going to make $1 billion this year. So when you think about where is that $1 billion comes from, it all comes from our pockets, one way or another. You might not see it, you might not understand it, but the fact that they're using your coins to front run transactions, to short, to leverage buy, to do all these things that they do when they see market movements, because they're trading on their own behalf, and part of that is again, Binance is just one exchange. I'm sure that most of these guys, as long as they're operating in the non-regulated markets, they do all kind of nasty stuff that's not in the best interest of their customers. So Binance got kicked out of Japan because they were violating local rules and so on. So they had to basically overnight decamp and go to Malta, and they couldn't operate in Hong Kong, they couldn't operate in the US, and again, it's not just them, but they got caught shorting some of their customers, like ICOs and others, and all I'm telling people is that they should remove their coins from exchanges, and part of the reason why we created Celsius Network was really to basically give hodlers a place to be where they knew that the wallet was acting in their best interest. So just as an example, if you can take the same coins that Binance is using to short or front run and park them on Celsius, and then Celsius charges hedge funds 10-15% for doing the same action, right? So if the coins are scarce on exchanges, the hedge funds have to source them from other places and pay hefty fees to access them. Today, all these fees are being collected by the exchanges themselves, not by the coin holders. And all we're saying is let's huddle together and reduce the volatility, because we're eliminating access to the coins. But if people still want access to these coins, let's make sure they pay us hefty fees for causing this disruption.
So in this case, what you're pointing out too is that exchanges, whether or not specifically Binance, but some of the larger crypto exchanges that have a mass amount of coins under them, almost like a bank, for example, is lending out those cryptocurrencies to major hedge funds who want to speculate or trade on margin in a sense, or maybe invest in ICOs. And instead, on something like Celsius or one of these kind of like lending-based platforms where we can retain our crypto in a wallet and use it as collateral in the sense of making like a dollar-backed loan and everything, we can actually take that profit away from the exchanges and kind of put it in our own pockets.
Right, and beyond that, they're also basically front running your customer means that you can see which transactions are coming in, and then you, the exchange, on your own account, right? This is not on behalf of some hedge fund. This is on your own account. Buy or sell coins in front of your customers to raise the price or lower the price, so you could make money because you see a big order coming in or there's a liquidation coming in, right? So let's say Binance has an account that's on margin, and Ether is about to hit 250, and they know that if it hit 250, they're going to have to liquidate $1 million worth of Ether. So they'll cause it. They can actually cause that liquidation themselves, because they know they can then sell that $1 million because it's their own account, right? It's their own settlement. So they know they can basically buy it back at a much lower price. So they're shorting the coin itself. They will short Ether to bring it below 250 to cause that liquidation, and then buy it back at, let's say, 245 or 240 or whatever, and just pocket all that money, right? So they're taking the counterparty's side to the transaction, and that stuff is illegal in the United States, for example. It's illegal in Japan, and if you do that, you have to disclose that to your customers and things like that. And Goldman Sachs got caught doing these things, and really got in trouble for it. So all I'm saying is that because it's a Wild West, and we're all cheering because we own some BNB, or we own some whatever. And what we don't understand is that we are hurting the entire community, because this volatility is what's driving a lot of these newbies that are coming in away from this industry, and does not allow us to accelerate adoption.
Yeah, no, I agree. I mean, I saw I was pretty early towards spotting the trend of exchange tokens. It seemed like when the ICO space was finally kind of slowing down and people were realizing there was a lot of ICOs that weren't delivering on promise or didn't have a stated, sense of objectives that align with what they were claiming were their values. The big thing that I saw is an instant shift towards trying to find something else. And the next thing was speculation over exchange tokens. And I tried to point out to people just how much corruption is going on. The amount of fake volume through wash trading, through market making, just literally exchanges that pop up overnight that appear to have more volume than Binance or Coinbase and all these well-established exchanges. And it's just, the thing is, these are the kind of inefficiencies that we can find sometimes that need regulation, that need standards set. And again, so long as there's havens around the world, and I think there's a good sense to this, that there are havens to promote blockchain development and lower regulations and lower taxes to allow these to flourish. At the same time, it can lead towards a lot of misleading things, and along with that, regulators in more traditional countries can't keep up with this. It's happening way too fast. There was about each day or so, there was about a dozen new Chinese exchanges opening up, and they had their own token, their own ICO, and they were just gigantic pump and dumps, which to me, I completely agree with what you were saying. It's something that scares away people, and it draws in speculators, and that's not what we want in this space. We need to understand that this starts at community, and it starts at building long-term relationships.
Right, and look, most of these transactions are fake transactions. When you look at the volume of actual transactions on the Ethereum platform, for example, and you compare it to the total volume on all the exchanges, 90% of all transactions are fake transactions, right? So you see them on this or that exchange, and you think that this is a real buy or a real sell, but really these are just bots exchanging transactions with each other without those transactions hitting the blockchain. And as long as there's no transfer of keys on the blockchain, then nothing has really happened. So if you look at BitMEX, or you're looking at some of the other, definitely the CME, all those transactions are not real transactions on the blockchain, right? They don't touch crypto. But BitMEX today is number one in absolute volume, and that dictates the price of Ethereum on exchanges. So all the other people are buying and selling based on what the price is on BitMEX, even though the BitMEX transfer has nothing to do with real coins. So it's so the ability of these guys to create this tremendous volatility and create these flash crashes and liquidate people that are long, and just create havoc, right, in the community. Right now, I'm seeing a lot of ICOs are kind of liquidating some of their ether, even though they're hodlers, because they get nervous, right? So all of that, and that's exactly what these people wanted, right? Because they want like panic, and then they'll cover their shorts, and then they might even go long because they know that the market has come back to some equilibrium. But none of that has anything to do with fundamentals or with anything that's actually happening on the blockchain. So I invite people to be more careful and really try to understand who's a good actor, who's a bad actor, who's acting in their interest, and who's not. And one thing that the reason we created Celsius was because we vowed to always to represent the best interest of the coin holder, right? We never represent the exchange. We never represent the hedge fund. Our job, which really today in today's world no one does, right? Your broker doesn't do it. Your real estate broker doesn't do it. Your insurance broker doesn't do it. Your financial advisor doesn't do it. But we vowed to, in this new ecosystem, in this new environment, to help hodlers and always represent their best interests. So we're writing that into the algorithms and the protocols that we're developing to make sure that our AI and machine learning and all the pieces that we have always do everything in the best interest of the coin.
So I'm interested. I definitely want to let you have some time to talk about it, because to be fair, I've always been kind of outside of the whole lending platform space and everything in regards to, and I don't want people to get it mixed up when I say lending platform. I want to be specific. This isn't something like BitConnect. This is something more along the lines of Salt and a variety of other lending platforms that allow you to gain interest off of your cryptocurrencies by being able to generate loans. So to put it very simply, this is pretty much like being able to have your own bank, to be able to own your own crypto, and then along with that, by being your own bank, be able to be the one who dictates granting loans. You get the actual interest rate. So I definitely love Alex to talk about it, because he gave a really interesting presentation. I think he did a great job explaining in one of your presentation slideshows. You were showing the interest rate that a bank pays you for your savings, and also the interest rate that they make off of the loans that they give when they're distributing credit, or maybe an auto loan, or a home mortgage in that case. So it's very fascinating to see that difference and realize that the bank is only making money because your money's in their vault.
Exactly, and most people don't understand that when they get money from the bank, that's not the bank's money. It's not, the bank just brokers money that they got on deposit from your neighbor, and money that you get to buy your car loan or to charge your credit card or anything like that. And the funny thing is that, like, for example, if you bought a house from your real estate broker and they charged you whatever 5 or 6% fee, you're upset about it because it's a lot of money, but it's reasonable. Let's go through a bank transaction and see how much they charge, right? And because most people don't understand how can banks be so profitable. So, they let's say that I did a charge on my credit card, and I basically loaned money from the bank through the credit card transaction. So now I owe the bank $1,000. They charged me 20-something%, right? And this money was taken from you, for example, right? From your deposit, from your payroll, right? And they pay you 1% or less. So they make 24% margin, which is 90-something% of the value of the transaction, right? So if somebody came to you and full disclosure told you, look, the money you're borrowing, we make 90-something% margin on it because we actually got this money for 1%. Here, sign here. You would be so mad that you would not do that transaction. You would probably say, I don't need this sofa, I don't need this piece of clothing, I'm not buying the refrigerator because I'm being taken advantage of. And that's what's happening millions of times every day, because Americans are just, we all are living on credit, right? Half of all the credit in the world is issued in the United States. And that's why the most profitable banks in the world are based in the United States, right? So when you see Jamie Dimon being so vocal against crypto, it's because crypto is the first time in history, right, that banks actually have a real threat. Because crypto can circumvent all of that and basically lend people at, let's say, 9% like we do, and then redistribute 5% of that back to the community. So that sounds like a much better deal. If you put a deposit, you make, excuse me, you make 5%, and if you take a loan, you are charged only 9%.
Yep.
And the reason we're different than Salt and all the other people is because Salt basically said, hey, if the bank is charging you 25, how about if we only charge you 18 or 20? That sounds like a good deal, but that's still ripping you off. So what we try to do is really charge the least amount possible to the borrower and pay the maximum amount possible to the lender, right? And really create an ecosystem in which the depositors and the borrowers benefit. And it's going back to the community bank days where your local bank actually did something in the interest of the community. They gave you a mortgage and they took the interest you paid and they reinvested it back in the community, in the pizza shop, in the gas station, in building a basketball court. You don't see any of that anymore, right? All you're seeing is people like Wells Fargo opening 20 million fake bank accounts because the making 40 billion a year in profit wasn't enough. They needed to make 45 billion a year in profit. So it's obscene, like seeing, and no one went to jail. Not a single person got arrested or went to jail for defrauding millions and millions. 10% of the U.S. population got defrauded.
Alex, so you're gonna get me ranting on about banks here. You got to be careful.
Yes, look, I say it the way it is. I'm not, I did well, and there's nothing these guys. Usually, people don't say these things about Binance or banks or whatever because they fear that, oh, if I have to work with these guys, what's going to happen? They're not going to give me a loan or whatever, right? So the problem with banks is when you're rich, everybody wants to work with you. When you're poor, is no one wants to give you a loan no matter what. So, and it's just, again, this does not work for most of the society. It doesn't work for most of the, 7 billion people on the planet don't have access to credit. So all we're saying is that we have this unique one-time opportunity to really reinvent lending and borrowing, which touches every person on the planet. Everybody on the planet needs one of those services or both, and we want to do it right in the spirit of Satoshi Nakamoto, who basically said, let's build a whole new financial system, not fix the old one. So, and that's why I get so mad when I see, again, exchanges and other people take advantage of it just for short-term profits.
Yeah, no, I completely agree with you, Alex. And the one thing I wanted to bring up when you were talking about the interest rates, I think people don't understand the value of having a lower interest rate on the lending side, because I think in order to build out your ecosystem, it's just my opinion on it, but I think it's a valid point, is that in regards to trying to build out a lending ecosystem, you see things like Salt, for example, that had ridiculous rates. And that was one of the big turnoffs for me. I kind of sat there and I was thinking, I'm like, it's not attractive enough for me to go from a traditional system of finance, which, to be fair, as much as we rant on, the dollar, if it's pegged to the dollar, it's a relatively stable currency and it's a relatively stable lending platform with a bunch of clout to back it up. But in the case of these lending platforms like crypto, a drop to 5% isn't much, but down to 9%. If I can get 9% on credit, and I can know that I'm going to pay a much lower rate than the traditional system, that's something that I'm willing to switch over to. And then you build a demand. And once you have the demand for a guaranteed return on crypto, I think that's going to attract all the capital you need. It'll build the community itself. People want to move from exchanges. They want the stable returns of lending. And I think that's where the power will come in, really building something like that for the community. It starts to get to a point where it speaks louder than words, and you can see it within the numbers. So I think that's really awesome.
And that's exactly, our mission, right, is to bring 100 million new people into crypto. And to your to your words that you just mentioned, it's providing a service that is not available in traditional financial community. and then leveraging that to attract all these new millennials and everybody else. So most of them don't have access to credit, right? Or the credit score, they work part-time in Uber or this or that, and they just don't, they do not have, you know, they're not going to check out if they walk into a bank to ask for a loan. So you know, it's and again, these like Salt is borrowing its money from hedge funds and people like that, so they're feeding the sharks. You know, it's like you know, they're not giving anything back to the community, right? None of that profit, when they charge 18% and they're borrowing at whatever 13 or 15%, none of that goes back to the community, right? So people have to understand that they're, when they're taking a Salt loan or they're taking a credit card loan, and they're not helping anybody, any other millennial, right? So we in our app, if you download our app, we're actually showing all these guys side by side, just like you know, the insurance guys do, right? The car insurance guys, Progressive, right? They show you all the competitors. So we kind of lined up. We're showing Salt, we're showing Chase, Sapphire, and another important point is that because it's an asset-backed loan, right? We only lend against crypto. We only charge interest. We don't charge principal. So the 9% is a true 9%. It's not 9% plus another 3 or 4% of principal, because basically when you need your coins back, you can repay the loan and get your coins back. Until then, it's really an asset-backed loan, just like Fidelity would give you against your Facebook stock or against your Tesla stock or whatever else, right? You don't need to. So it should not be treated any differently than any other asset-backed loan.
Yeah, no, that's interesting. Yeah, taking more of the asset approach in that sense, having, and you know, going towards the collateral aspect. You know, when you're applying an asset like that for a loan, what was the ratio again, if I remember correctly? Is it 50, pretty much 50% of what you want to lend out? So if you have, for example, you want to make $1,000 loan, you need $500. Sorry, no, excuse me, it was the opposite way. It's basically if you wanted to do a $500 loan, you need $1,000 worth of crypto. Is that correct?
Yes, so we have two tiers, 33% and 50%. And it really depends on how much risk a person wants to take, how much money do they need, how many coins they have, and each person makes their own decision. But basically, if you want to take a loan and not worry about it, then you do the 33% LTV, right? And worst case, again, if the coin value goes down, all you have to do is deposit more coins or pay down the loan. Right, you don't have to pay all of it. You just pay some of it to bring yourself back in good standing. But again, our job is not to liquidate you, front run you, short you, or whatever. Right, our job is to make sure that we make as many loans as possible, and we use the interest to enlarge the community. Right, that's the only purpose of our existence. Right, it's not. Believe me, no one here is taking huge salaries and buying Lamborghinis and whatever, which is what everybody else is doing. So, you know, I think this is a critical service. It's a service that is needed by billions of people around the world. And this problem with the banks is a global problem. It's not just something that exists in the US or whatever. And, you know, I saw some stats that in the last 10 years, only 13 new banks were opened in the United States. It's like an FDIC stat, and that over 300 banks got bought by the large banks, right? So the number of banks in operation is shrinking drastically, and that's why they can keep this charade going. That's why they can only pay you 1%, because everybody else only pays you 1%. But most of us don't understand that we give the power to the banks. If we took these deposits and instead of putting them in a bank, put them in crypto or put them somewhere else, in cold storage, right? Put dollars in cold storage like we used to do under the mattress. The banks will lose all their power. Like JP Morgan would be a worthless company if everybody stopped depositing money in JP Morgan. So their power source, even though you think they're so powerful, is me and you making the deposits. And the reason I'm so confident about this is because I went through this with the phone companies. Back in, you know, when I came to this country in '89, the most valuable and the most profitable company in the United States was AT&T. So in the early 90s, when I wrote the VoIP protocol and the patents, I showed them my system, and they're laughing at me, saying, hey, you know, we're the most powerful company in the world. What do you think you can do? Nothing's going to happen here. And 5 years later, they were my largest customer. And today, AT&T makes no profit from voice communications. All of its profit comes from wireless and other services.
Wow.
Because they're actually losing money on their international termination. That used to be 90% of their profits back in 88, 89.
Times change.
Exactly. And so the same thing is going to happen with the banks. It's just most people don't see it today, right? When you see these really powerful monoliths, you're thinking to yourself, wow, they're untouchable, right? But really, all their power comes from our deposits.
Yeah.
Just like AT&T, all their power came from our willingness to pay $3 a minute to call overseas. The minute we stopped doing that, all of their profits went away.
Yeah. I mean, that's the thing. When going back to your whole point there, you made a very good little rant there on the whole kind of, my whole kind of feeling in regards to how industries evolve. You can look at the banking sector right now, and it's not hard to see, both in banking and practically any industry, the centralization that's happening. There was a really interesting piece that I found a while back called The Network of Global Corporate Control. It was like an old article piece that someone had brought up in a presentation at a conference in Dubai for cryptocurrencies. And they talked about how centralized the corporate world has become, and I think the financial sector is a pinnacle of that. And now it's gotten to the narrative since 2008 that they're too big to fail, that they can't go under. But they could very well fail, and they can do it in a very smooth way if we start to realize that we don't want our money in their hands, if they're going to keep giving us the bad end of it. If we lend to one another, we can have lower rates, we can make higher returns. I mean, that just seems like such a good deal to me if we're going to have a credit-based system, and it's actually going to be asset-backed to a degree, which until we, I think, exit that traditional financial system, and you've talked about this, seeing as this is creating fiat loans and everything. If we can remove that power structure, eventually we can hopefully get towards an entirely crypto economy, which is what I hope to see in the future. I think it's a long way down the road, unless things really start to pick up over the next few years to the downside. But until we see currency instability and stuff, it's a really good kind of segue into getting people comfortable with crypto, investing and holding crypto, and then also being able to learn how to actually use it for value. But again, towards your point and stuff, it's fascinating to see how industries will evolve and how something so laughable at first can seem like something that will never take over an industry, but it inevitably can be an absolute game changer. I mean, like you said, calls used to be extremely expensive, and you and I were talking last time about how much they'd been reduced, right? Like the actual cost for like even the early days of voice over internet protocol, what it would cost, compared to what it is today.
Yes, it's basically free. I mean, you have a little bit of cost because you're paying a monthly fee to your provider, right? To your cell phone provider or your internet provider. But effectively, the connection is free, right? So because everybody pays that the access fee to the internet. So but going back to the corporations, you're 100% right. The biggest lobbyists, right? All of our laws are written by lobbyists, and the biggest contributors to all these lobbyists are corporations. You don't see a lot of individuals running to Washington and hiring lobbyists and paying them billions of dollars. The banks are, I think, the #1 group out of all the lobbyists, and they pass the laws to protect themselves, right? The laws are not passed against the banks. So you really have an imbalance in the United States where corporations are getting more and more powerful. And that's why you have the majority of the population just not participating, right? Our income has not grown in 20 years because of inflation and everything else. And again, we're paying a toll everywhere. Everywhere you look, you have a toll collector that is extracting all the value. Facebook makes $25 on average on every one of their customers, right? So it's just crazy. So you get nothing for it. All you get is free access to a utility that has all of your information in it. So again and again, all of these services are not in your best interest, and today, again, crypto solves just some of these things, and that's what we're focused on. Right? It's just basically taking control of your financial freedom, managing your own finance, being able to make sure that when you go to sleep, where your money sits is actually acting in your best interest versus being manipulated and taken advantage of.
Yeah, I mean, there was an old video that I had actually found back a few years ago, and I think it was a senator from the United States. I think it was like Elizabeth Warren or something back in the early 2000s, and she was getting interviewed, I think, on something like 60 Minutes or some interview channel, and they had asked her who was the biggest lobbyist in Washington, and like you said, it was the financial companies. It's the credit, the people who give credit out to the markets.
Yep.
And the reason why is because of the fact of how currency is created, how banks can lend out money, the amount of profit that they make is unmeasurable. And I think
it's obscene.
Yeah, it's crazy. People don't realize, again, going back to the whole point here, if you own your own money and we were to actually build systems where we could do this ourselves, we can make those kinds of margins. People could actually be financially sound with their money and see it grow on the side rather than having it sitting dead in a savings account. And that's really been, it's imperative to realize that because wages have been stagnant. We haven't seen, we've seen in the United States, the middle class shrinking. There's a bigger gap between people in poverty and people who are on the wealthier end. And it's simply because of how the financial system works. I mean, Alex, thank you very much for spending the time and stuff. I mean, this has been awesome to get a perspective from you on this. And again, I'd love to have you come back on sometime, talk a little bit more about it, and hear some more from you on Celsius.
Yeah, and we'll send you the links to the debate, and as well as the Medium thing you can find easily. Just Google my name in Medium, you'll see the post about the exchanges. So that's publicly available.
Awesome.
All right.
Thank you very much, Alex. I appreciate it very much. Best of luck with everything you're doing, and hope you have a great rest of the day. Thanks for coming on.
Yeah, you too. Take care.
And that's going to be it for the second episode of the DashCast. Thanks so much, everyone, for tuning into this episode. And if you liked it, please give a thumbs up down below. And if you haven't already, please consider subscribing to the channel. Along with that as well, I'd like to give a shout out again back to Alex for coming onto the podcast. It was a great discussion. And interestingly enough, some of you might have noticed this, we were using the underlying protocol that he helped to build. Interesting. Outside of that as well, again, a big shout out to our sponsor, BravoPay. Again, if you guys haven't already, check out their website, bvo.trybravo.com. Thanks again for helping to support the podcast. Anyways, that's going to be it for the episode, everyone. Thank you all so much for watching. If you have anyone you'd like to see on the podcast series, leave a comment down below. We love taking in your feedback. But until the next episode, take care, everyone, and I'll see you all in the next one.